Hey guys, welcome back. This is Rad. Today I'm going to analyze how to trade in fair value gap. So, fair value gap concept, I first identify an imbalance in the market created by a strong impulsive move like this. This is strong impulsive move. Okay? So this usually appears as a three candle formation where the price moves aggressively. This candle and this candle, these 2 wicks here and here. When price moves aggressively to the upside or downside, so between here and leaving a gap between the first and third candle, once a fair value gap is identified. So when I take a trade, I identify first valid fair value gap. This is a valid fair value gap. Let's here you can see price comes down for this gap. Here it's become a support area and price retrace again here for a moment, then go to the aggressively to the upside. So I do not enter immediately, because when you take a trade in immediately, you have no chance to catch the good moves. So here you can see 649 points plus 40%, 10 bars here. So when you take trade here, the price gives you a good opportunity for buy to take a good profits. So instead I look for confirmation signals such as shift in market structure. Here it's a shift market structure. As a shift in market structure, strong rejection or entry patterns on a lower time frame. Let's go to the 50-minute. Let's say this here. Here we go. There. This and this week. And when price comes back this area, but it's not valid imbalance. So price did not comes here to retrace and go up. So we have to find the valid imbalance. This is this gap. This gap is the valid imbalance. When price trade this gap goes up aggressively, and this become a valid imbalance. So when I take a trade, something is more important. When you take a trade here, your stop loss just below this area, and it's very small, and your profits and your TP will be the best. So in a bullish setup, I look for a retracement to this retracement within higher time frame uptrend. When price shows sign of rejection or firm, this is the rejection, a higher low, this is the higher low, I enter buy position. I take a trade here, place an order here, and the gap and target and liquidity above recently here, here, and here. And in a bearish setup, I wait for retracement. Let's say this is there. I wait for price to rotate into a bearish fair value gap here. You can see here the bearish fair value gap here, here, and here. Between during a downtrend. When you took a trade here, you have to wait for price to retest this area, then you place an order here for sell. So such a lower highs or bear structure shift, I enter a sell position with the stop loss above, stop loss just below here, and lower highs and bear structure shift, I enter a sell position. I put a trade here, and stop loss just above the gap and targeted liquidity below, just here and here, and targeting here. So I booked my order here. Risk management is essential. I always ensure proper risk to reward, typically aiming for at least 1 to or higher, and align my trade with the overall market's direction, increase profitability. This approach allows me to trade in line with institutional order flow. This is the institutional order flow, and improve my consistency. So this was the video I'm uploading today. You can take a trade here and make a good profit. Thank you so much.